AMC continuing on our projected path to the downside from our last thread of analysis. Let's go ahead and find out exactly what can happen for the next sessions. What is up, you guys? Thank you so much for stopping by once again on this fine Tuesday night. This is ARCa coming at you with an AMC Technicals raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. Almost lost it in that introduction right there, you guys. Okay, anyway, yeah, so we are looking at the previous ascending channel that we were riding for AMC, where we did notice that we could potentially face a downside continuation, of which we did. Okay, you guys, so in this particular zone here, this is the inverse Fibonacci ratio that we actually took from the top of the trend so that we can gauge a potential downside. So, first of all, the very important thing to notice here is that you can see the SMA 10 serving as kind of a guide towards the way down, okay? Very important to notice that. Pardon me, you guys, lots of water. Okay, so another thing to notice here is that we have to also take into account our psychological targets, which is a small gap right here, located between $4.21 and $4.31, about 32 cents. Okay, so the candles are actually from, actually we have to make a quick little adjustment to this, as you can see that the gap is now just slightly a little bit higher based on this candle right over here. Okay, so I mean, nonetheless, we can actually just leave it there. Such an insignificant candles, no problem. And the candles actually are comprised from the dates December 23rd wick low to the wick high of December 27th. Okay, so that gives us this little psychological component there, potential upside type of thing. Okay, but I'm not saying that the upside is now. I'm actually seeing a continuation to the downside, particular to the AMC asset. Okay, so in the 12-hour chart of which we're in right now, we can technically face a downside continuation to potentially the 4.618 inverse ratio at about $3.56. Okay, let's go ahead and continue on the analysis so that we can validate some more downside here. Okay, so yes, so we're going to go ahead and continue now with the newer descending channel that we have now printed. We're on the daily chart now, and we're going to be using the Crypstex ARC-Series indicators. Okay, so these indicators are actually some tools that have been granted or actually given to me so that I can use for my trading style. Okay, these guys have been so amazing to me. Crypstex Trading. Okay, you guys, so we are offering these indicators for you as well. Please send me a DM if you are interested in acquiring these indicators. Okay, so please know that the subscription packages for these indicators are for the indicators alone. Okay, nothing to do with the Trading View subscription package. Okay, as Crypstex, they are retailers or authorized retailers within the Trading View space. Okay, you guys, so let's go ahead and load up first the ARC DBSI and the 13-day exponential moving average, which is very important to the DBSI indicator. Okay, so the DBSI indicator is a statistical indicator that actually takes a score of every single candle print throughout the entire trading history of that asset in the particular time frame. Okay, so this is a score based on the daily time frame, and as you can see, the bears are still leading the way with 54% over the bulls 46%. Okay, you guys, and another thing to notice is that DBSI also has buy and sell signals. This sell signal was printed on December 6th, and it has since continued to the downside, and we have not printed a buy signal just yet. So from our previous analysis, we actually said that the potential of us reaching the 1.618 inverse ratio at about $3.99 absolutely happened, and we actually came about it with 1 cent shy of it. Okay, you guys, so this was the first target that I mentioned to you that we were likely to reach. Now the second and third targets are presenting some confluence between the target that we were looking at as the inverse 4.618 at 356. So 356 would literally be right between the 2.272 and the 2.618, located right about here, literally right in between. So now there is more confluence with now these targets here. Okay, you guys. So there is a high potential that we can actually reach these targets before finding a bounce, which is also sharing targets with the bottom side of our descending channel, which would be essentially the confirmation that we are in fact in a descending channel. Why? Because we need absolutely in the minimum 2 touches of the support and 2 touches of the resistance in order for us to validate that formation. Okay, you guys, definitely something you want to take a note of. Okay, so let's go ahead and now block the visibility of DBSI and load up ARMor. Okay, so ARMor is suggesting still that downside. Okay, so this was actually printed also just in line with the DBSI on December 6th, and ARMor is actually an indicator comprised of several exponential moving averages, all of them placed in very close proximity to each other, within the chart, so that we can gauge this, or we can gain this actual directional movement or directional waves. Okay, so these waves actually now are able to assist us in giving us buy and sell signals as well. As you can see, we had a long signal here, it went up. We had a short signal here, it went down. We had a long signal here, it went up. Short is still presented, and we have not recovered with a long signal just yet, which is primarily why I brought up the ARCa indicator. Okay, you guys, so let's go ahead and now move on to the next chart, as this will be the last part of the analysis. Okay, you guys, so in this case, we're going to load up the RSIs, and please, for the new viewers, take a gander at this diagram right over here, as I have made it for you. I blew it up specifically so that you can see these 4 zones, as they are located right over here on the live chart. Okay, so let's go ahead and just minimize the visibility just a little bit so that we can continue with a comfortable space. Okay, so the immediate short-term time frame, 30-minute, is suggesting a downside. Okay, now that downside may actually be able to recover, but I can't say this for a fact. The reason why I say that it can recover is first of all, the 14-day moving average, represented by this pink line, may be used as a form of support by the RSI signal line, the purple line, and we can continue on to the upside. Another reason why the upside can be likely is for the fact that we're sitting right at the very shallow areas of the bear weakness, of the bear strength percentile. Okay, when we're at these junctions, at these borders, we can actually expect kind of a gravity pull right into the following zone. Okay, so now the bi-hourly time frame is suggesting some sideways trading. The thing that's bearish about this is that we're very much in the deep areas of the bear strength percentile, and the 14-day moving average is above us, and the 14-day moving average is suggesting a hint to the downside. Okay, you guys, let's look at the 6-hour time frame. The 6-hour time frame is suggesting literally, actually a little more of an exaggerated version of the bi-hourly sideways trading right at the junction between bear strength and oversold. Okay, so this is, and the moving average above us. Okay, so this is looking still a little bearish to my opinion. Okay, so now actually, you know what, the 5-day time frame is suggesting downside, but let's look at the daily. Daily is suggesting a continuation on to the downside, with the moving average being used as a form of resistance and a guide towards the downside. Okay, so we definitely have to give this some weight. By daily is suggesting downside, very much in the grips of the bear strength percentile. 3-day is suggesting downside, very much in the grips of the bear strength percentile, and also the 5-day, which we already mentioned. So yes, you guys, I am definitely looking at these targets coming into fruition between 347 and 365 first. Pardon me. Another thing that we do have to notice is that we do have, let's go ahead and block the visibility of ARMor. We do have some psychological lows to take into account here. Okay, we do have a small gap that was comprised from back in the January run-up, and these 2 gaps can present a psychological sentiment. I'm sorry, like a psychological component to wanting to reach the price action down to those areas. It's kind of like what I'm trying to say. My apologies, I'm getting tongue twisted. Okay, you guys. So yes, please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I can't suggest for you to buy or sell any assets whatsoever. Okay, I need you to do your own DD, and everything will be just fine. If you feel like you need to contact me, you guys, I'm having a little bit of trouble replying to everyone and getting through all the DMs and all the comments that are coming through the different social platforms. But trust me when I say that I am trying my best, and I'm trying my best to get to you. Okay, you guys, but I'll make sure to leave those links in the description in the event where you do consider joining the ARCap trading community in Discord, or if you want to just say hi to me on Twitter, those links will be right below. Okay, you guys, but with that said, I think this is it for the video. I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.